Hello, welcome to the LearnETRM podcast, where we break down complexities of the energy and commodity trading markets and bring you insights from industry experts across the world. My name is Chirag.
And I'm Ranjan. Today, we deep dive into the world of technical analysis. And to guide us through, we are honored to have with us Eddie Tofpik, if I pronounce it right.
That's correct. My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited, part of Archer Daniels Midland. I'm also Chairman of the UK Society of Technical Analysts, the oversight body for technical analysis in the UK. And that's a not-for-profit. And the other not-for-profit I work for is as a director of the International Federation of Technical Analysts, which is the different societies around the world.
Eddie, truly an honor to have you here, and real pleasure
That's very
to have
kind
you
of
on
you.
this podcast. You really have a highly meritorious CV and profile. Extremely glad you're here. I'll deep dive straight in. For those new to the commodity markets and our world, can you briefly explain to the listener what is technical analysis and why does it remain such a valuable tool for traders and risk managers who are involved in our sector like oil, metals, agriculture?
Okay, technical analysis in its simplest form is the study of price action, and only that. And price action takes usually the form of three things: the price itself, the volume, if it's available in some markets. For example, in the futures markets, in most of them, you can have the volume, but in a lot of other markets, OTC, over-the-counter markets, you don't, but volume. And then open interest. Open interest is the unresolved positions. If you've bought something and you haven't sold it yet, or if you've sold it and haven't bought it yet, that's counted as open interest. And it's the study of those three areas. That's what technical analysis is all about.
Well, Eddie, thank you for such a crisp and a simple breakdown of the technical analysis. What I would deep dive into, like you have an experience over 26 years running the FX techs, and now you lead the technical analysis desk at AMD. Uh, how has the approach of the market analysis evolved over time as per you?
Well, I actually started technical analysis back in about 1985. Then I was brought to it by my desk head. I was on the futures desk. That company doesn't exist anymore, but I was on the futures desk, and he studied technical analysis. And the way we did it in those days, which is completely different to now, we had paper charts. We would receive a book of paper charts every week, which was updated, and we would during the week add those in and transpose any positioning lines, etc., that we wanted onto that new book. And we had a big roll, huge roll on the left hand side of paper, and then across here and another fresh roll of paper on this side. And what it was is that was a point and figure chart, which is a type of technical analysis. And we would update that. Primarily it was for copper, gold, silver, platinum, and palladium. And we would do that with a very, very fine propelling pencil. And we had special chart paper, which we had to import from America. And we joined it up together with very special tape.
Wow.
And I don't do any of that stuff now. I don't do any of that. I covered about
Crazy.
20 markets in those days because that was really all you could look at and keep going.
Yeah.
Now I cover close to 200. My productivity has increased tenfold with the advent of computers and graphical interfaces and being able to use systems on computers to update my charts automatically. I don't have to draw anything other than my own trend lines and various indicators that I use.
Okay. Wow. Yeah, that's fascinating. I was reading the book another day, and there was another author mentioned that pre-1990s they had to hand draw these charts
Yeah,
and draw the
I did
lines.
all that.
It's
I did all that. And it was you were an apprentice. I was a youngster on the desk, so I did that. I updated the charts. I had to make sure they were correct. And we had both of us, and he initially my desk head, and then I generated the positions, the ideas from that, the risks where they would be in various markets from that. Now, I asked him when I was doing this, I said, why do you use technical analysis? Why don't you use what I call the F word, fundamental analysis. It's a family audience, women and children, so we mustn't say the F word too many times. Why do you
Yeah,
not
absolutely.
use that? And and he said to me, it's very simple. He said, I can give an opinion on using my charts on any of these markets within a very short space of time. If I was to study the other forms of analysis, I would have to deep dive purely into those and not be able to give an opinion. I could talk about soybean oil. I could talk about crude oil. I could talk about gold. I could talk about copper. But if I did that in the fundamental way, then I would have to be specifically for that, and I wouldn't be the ability to do across those. And I also said to him, why were you doing this? And he said, one day I will become slow or I'll be outdated as a broker. And this is back in the 1980s, mid 80s.
Wow.
One day I'll become slow as a broker, but this will still provide me with a livelihood. And I think I'm slow now as a broker. I've been doing this for over 40 years. So I'm now using that analogy that this is now my livelihood, that providing this information to the traders, to the risk people, is what I do now. Whereas before I was actually broking it or trading it.
So, as I understand, Eddie, the fundamental analysis will give you a narrow view because you're studying just one commodity, but technical analysis, the principles can be applied across, and you can tell what's happened by by the analysis of the price movement.
Well, there's two answers to that. The first one is yes, I can do. As I cover things from shipping through rubber, through financial markets, through metals, energy,
Right.
grains, all those things. I can do that now. And I'm today. This is today when we're recording this is a Monday. So I've already done foreign exchange. I've done gold and I've done Brent crude oil. This afternoon, after this, I will be covering sugar, both London and New York,
Yeah.
and coffee in London and New York. But
Wow.
that's part of it. I can cover those markets from a technical analysis point of view. The other thing is something that one of the people the first real book on technical analysis I read, which is still in print, but it's updated. It's called John J. Murphy. It's called Technical Analysis of the Financial Markets. You can buy it online. I think it's its 21st printing or something like that. Originally, it was called Technical Analysis of the Futures Markets. One of the things he says in there, which is I've always used ever since, he says that, and I'm trying to remember the quote, technical analysis is the leading indicator to fundamental analysis. We see in technicals before it happens in the fundamental analysis.
Okay. Okay.
Yeah.
And that's why I use it.
Okay. Okay. Interesting.
Yeah. So for those aspiring to build a career in technical analysis, what are the key skills or the habits would you recommend them to develop to succeed in the long term?
We were talking about this off camera just beforehand, and I think there is about books
Yeah.
that you can use. And there are two that I would suggest. One is a trading book, and one is already mentioned, which is Technical Analysis of the Financial Markets by John J. Murphy. It's a brilliant book. It's not that hard to read. And once you read it, you can then go from there. Now, the Society of Technical Analysts, the one I belong to in the UK, and then we do this internationally, not just in the UK, because we do this online, etc. We provide courses in technical analysis, 2 diplomas, Diploma 1, Diploma 2, where you then become accredited as a technical analyst. And that's recognized by the Chartered Institute of Securities Investment in the UK, amongst others. And it's recognized internationally under the International Federation of Technical Analysis, technical analysts. So excuse me, I would suggest that book as being the first thing you look at. And then look at the Society of Technical Analysts. It's a reasonable price for most people to become. I think we have a lot of people who we call retail traders are in there who, associate membership is only £85 a year. And there's lots of there's like 15 years worth of videos, including ones where I'm speaking, where experts in technical analysis go through various things of how certain theories work within technical analysis. I'm not going to go into those in detail because you can see that, and that's easily found on the website www.technicalanalysts.com, the plural. The other thing I would suggest is this second book, which you should, I think everybody who's involved in trading, excuse me, everybody who's involved in trading one way or another should have a read at least once. My copy is behind me here. It's Reminiscences of a Stock Operator by Lefebvre, and it's the story, it's the wrong name in it, but it's the story of Jesse in real life, Jesse Livermore. Jesse Livermore was the big short in the crash of 1929.
Wow.
He was hugely short. If I was to give you an idea of his, I'm not saying the size of his position, I'm saying how much money he made.
Okay.
Allegedly, in those 2 weeks around the crash of 29, he made then, in 1929, $100 million.
Oh.
He was, he made 5 fortunes in his life. He was a contemporary of Bernard Baruch and J.P. Morgan. He knew all those people. And he was, he involved in a lot of things. And that's why I think it's very interesting to read that book, because the first thing he starts is he notices there is a pattern in prices when he starts as a youngster, chalking the prices on the board at a stock place. So, I mean, his story is very sad in the end, because he eventually committed suicide after losing his 5th fortune. But he was a huge player in the market, but it is worth reading about him to know how his mind worked, how he got where he got. Okay. So I would suggest those 2 books, and I would suggest the website, technicalanalyst.com.
Okay. Fascinating, Eddie. I heard about this book, but I haven't picked it up yet. But now, after hearing you,
I think I've got 2 copies, and on John Murphy's, I've got 3 copies, one of which is signed by him.
Oh,
and I've kept that.
Wow.
I've kept that wrapped in foil, wrapped in cling film, wrapped in foil. So
amazing.
Yeah, I've had the opportunity to meet him very briefly a few times. The first time I saw him was, I think, 1986, and it was a packed out auditorium in the London Stock Exchange.
Wow.
And he just brought out that book. It was called then Technical Analysis of the Futures Markets, and it was absolute. I was sitting on the stairs because it was your main cinema auditorium at the London Stock Exchange. And it was absolutely packed. And he's spoken at a number of International Federation of Technical Analysts meetings. He's very old now, and he's one of the there are a number of people who've I've respected in this industry, and he's always been up there on the top of that list.
Okay. Fantastic. In today's world, Eddie, today's trader, how do you see them integrating technical analysis? Do they couple this with fundamental analysis?
I had this discussion with somebody actually at ADM, and something he mentioned, which was very interesting. That now ADM, as you may know, is heavily involved in agricultural products. We're involved in primarily grain products and soybeans and things like that. So fertilizers, all sorts of anything to do with agriculture, we're involved in. And he said very interestingly, he saw that most of the traders he saw from the trading side, they got in for fundamental reasons, but they always used a technical analysis to plot where their stops should be to get out and where their take profit levels were going to be. So some people got in because of technical analysis. In fact, I know a lot of companies use a ratio of fundamental, seasonal, and technical analysis in breaking out whether they should go involved on the market or not. And that's from the agricultural side. But I imagine that's very similar for the energy and for the metals and minerals side in commodities, that you look at 3 areas, which is obviously seasonality, because there is seasonality in every one of those things. I've got a great story I can tell you if you've got time, which is to do with copper, but there is seasonality in that. Then there is the fundamental view, the F word, and then there is technical analysis. because what we're trading is the price. It's not whether there is suddenly a hurricane or good weather or rain or not rain. We're trading the actual price, so you should know what's going on with the actual price that's affecting it. And that's usually the largest portion.
Okay.
Yeah. Um, uh, so definitely, Addy, seasonality definitely in energy. I know, like if you study Henry Hub in winters, it kind of shoots down, like the demand kind of increases so drastically. So seasonality definitely impacts for sure in energy as well. So what I would like to ask you next is like, what was the most memorable and challenging moment in your career where the technical analysis played a very crucial role in navigating the market uncertainty?
Most recent one was the invasion of Ukraine and the effect it had on the grain markets. Because we went into areas we'd never. I mean, everybody mentions about crude oil going below zero, but I'm going to mention first off, that would be my second one. The first one I'll mention is the invasion of Ukraine and the effect it had on the grain markets globally. These are the sleepier markets. These are the ones that the older guys usually trade, and they send their sons off to do the bond markets or the S&Ps or something like that. So they're usually that sort of quieter market. And suddenly they became incredibly active to areas they'd never ever been before. And so you take your fundamental book, your F book, and you throw it out the window, because that's, what are you going to do with that?
Yeah.
Seasonality, no idea. But I used technical analysis. I projected levels into the future, and patterns developed that went into the future, into new high levels that I'd never seen before. And I was calm about it because I could actually see those things happening. And I remember a discussion with a grain trader, and I said, this part, and it was London UK feed week with futures. I remember this price is going to go to this level because there's an ascending wedge pattern, small one, but it will break higher to new high levels you've never seen. He said, he's looking at me going, you're crazy. He said, no, that's where the target will be for that pattern. I'm just telling you, I may be crazy, but the charts never lie. I just don't miss. If I miss it, it's because I miss it or don't see it. So it went to a new high level, and it picked that level, went a quarter above, and then came back off again. And he looked at me as if I was some sort of witch.
Crystal ball.
Burn the witch, So that's that. Then when crude oil in the States, the WTI contract the futures went below zero, which you all know the reasons why. Predicting or pushing where the support would be below zero. Some of the tools I use in technical analysis couldn't be applied, but I could apply others to going to below zero. And I did have levels which looked at below zero and how far we went. That really is the one that I would say it comes out more than anything else. Is the most recent one was happened within the last 5 years with Ukraine. About 5 years with you in Ukraine.
Okay.
That was nuts. It was crazy. But I had so many phone calls, so many emails, so many messages, so many WhatsApp, so many anything through LinkedIn, anything were trying to get hold of me to say, what do you think? So just give me a second to do this analysis. I'll publish it, then everybody can look at it at the same time. Because I stopped writing about 5 years ago. I only do videos now. Because you've got to look at the chart, and I can't. And one of my clients said it. Said, I love your analysis on. You were talking about sugar, actually, or no, coffee. And he said, I love your analysis, but I haven't got the time to read it. And he said, can you do something that I can listen to whilst I'm driving into work? He worked in Chicago. I'm driving into work. And I thought, that's a very clever idea. I tried it with a podcast, a sound one, not good, because it's a very visual thing that I look at. So now I just produce videos. They're available for free on YouTube, and they cover all the markets that I cover. And all you have me is in a little window in the corner, this little window down here at the bottom of the corner, talking and pointing occasionally to this or something like that. But the rest of the time is purely about the chart, and it's always about the chart as far as I'm concerned.
How does one search for these videos, Eddie, on YouTube? Do I type Eddie?
You can put my name into YouTube and you'll come up, and it's on the ADM Investor Services International YouTube site.
Okay.
Alternatively, look me up on LinkedIn. Introduce yourself. I'll happily put mention this show, and I'll be happily to connect. And then I send them out on LinkedIn. I send them out on Substack, Twitter,
Right. Yeah.
and I forgot what it's called, the blue one.
You're missing
But
Instagram and TikTok, but maybe
no,
you will get that.
I do on TikTok for once a
Oh,
week.
okay.
I do it on once a week. I have a choice because Mondays I got to do sugar and coffee. Tuesdays is metals.
Okay.
I mean, do FX. I do foreign exchange, gold, and unless I'm doing something like this, foreign exchange, gold, and crude oil every day. Mondays is sugar and coffee. Tuesdays is metals. Wednesdays, anything I find interesting. And I've got a very long list of stuff to talk about this Wednesday. And then on Thursdays, it's oil seeds and vegetable oils, which includes palm oil, rapeseed, and canola and soybean oil. And Fridays is grains and starches, which covers corn and wheat around the world: Chicago, Kansas City, Minneapolis, London, Paris. So I cover those markets.
Wow. Wow.
Wow, you cover a wide variety of them.
It's because of modern technology I'm able to do that.
Yeah, for sure.
Fantastic, Eddie. How do you approach educating new traders or analysts? Because I tried myself, about 12 years back, technical analysis, and there were so many indicators: RSI, MACD, moving average, convergent. I remember trying to plot them and trade the Indian stock market as well. But there was no structure. I just read a book off the shelf and tried to apply that. Do you have any advice for the young gun trying to get in? And what's the
Yes.
best way?
I mean, first off, the simplest solution and the cheapest is to get Murphy's book. Once you read that, then you can then start choosing what you think is important. The second one is the Society of Technical Analysts. They run these courses, the Diploma 1 and Diploma 2, and they can teach you about how to apply technical analysis to modern markets. And that's the best way. There are a lot of charlatans out there. There are very few accredited technical analyst courses, but the Society of Technical Analysts is one of them. If you are taught by a member, especially a senior member, a fellow of the Society of Technical Analysts, and you have the opportunity to sit and listen to one of them, then that's also worthwhile listening. There are plenty of those who have, they teach courses around the world. But the Society of Technical Analysts is the way I would look at it. And it covers everything. It will give you a grounding that you will be absolutely superb to go forward, and then you choose. I did it before we had the courses, so I read that book and then I chose what I wanted to follow, and I follow a little bit of candlestick theory, which you can find out about, a little bit of Gann, because that's a little bit esoteric. I don't usually use Elliott, but I sometimes do. I use a lot of pattern analysis, pitchfork analysis. I use very simple moving averages, which are related to Gann as well. And I use a lot of pattern and Fibonacci analysis on it. And one of the discussions we had amongst us as technical analysts, we occasionally get together and we start talking about stuff. Mm-hmm. Some people who use things such as point and figure, some people who use candlesticks, and people like me who use patterns. There's a phrase: all roads lead to Rome. Everything goes to the same place. Mm-hmm. It doesn't matter which analysis is used, because one thing you've got to realize is technical analysis is older than any other form of analysis. The first book on technical analysis was written in 1755 in Japan by Manesha Homma. It was called The Fountain of Gold, the Three Monkey Story of Money, I think it's called. And it's a really good trading book. You can get it. You can download it for free as a PDF, because it's been out of print. Well, put it this way, copyright died about 250 years ago on it. So he's still quoted. He's the one who came up with candlesticks. If you ever see candlesticks on a chart, he's the guy who came up with it. And it's a really good book on trading that he writes about how you should approach trading. There's nothing in it that can't be applied today. Fundamental analysis, I mean, the first modern book on economics was Adam Smith's Wealth of Nations, the beginning of capitalism. And that was written 25 years after Manesh Sharma wrote the book, which was all the things he'd learned up till that point in technical analysis. They were used in the markets, in the rice markets in Japan, or rice futures markets in Japan. Right. So it's an older form. For example, pitchfork analysis is about 125 years old. Candlesticks is well over 270 years old. The most modern recent stuff has been Elliott Wave, which is close to 100. And then you've got things such as Statham Lyer's market profile, which is 1980s. What has happened since then is that we've been able to use computers to do this better. We don't do it with paper and a propelling pencil and a rubber.
Eddie,
or eraser, I should say, depending who's listening to me.
Eddie, when I was reading about technical analysis, I maybe a stupid question, but something hit me as you said that everybody is arriving at the same result, all roads lead. So I was wondering if everybody is doing the buy when the indicator tells you buy, who is selling?
There's always people that make a market. There'll always be somebody who, I mean, you know, the situation is there are two types of people in the market. There are those who are the producers and the consumers. The producer of a commodity is always looking to sell at the highest price. The consumer is always looking to buy at the lowest. In between, you have the speculator. And they will take on the risk from the seller. They'll buy from the seller and sell to the buyer. They'll take on that risk because they believe that they will take on that risk to make money. They can do it. So there'll always be liquidity in the market. Not everybody uses the same technical analysis. And some of them, their timing is different. And that's another key feature is, you know, looking at the timing. Sometimes timing is the key level of everything. You can look and say, oh, this is a bearish market, but the timing, when's it going to happen? It could be, I mean, I've got longer indicators that go back. I've got sort of annual key reversals, which you know are many years in, they're decades ahead. The two ones that are famous was that I did I think it was the end of 21. I saw an annual key reversal up in cocoa, and I said, this is a major move in cocoa on the upside. And it's written down. You can find the video when I say it and everything. And the whole thing took off after that. And the other one, which is a little bit more recent, is in soybean meal, a product from soybeans, where I saw an annual key reversal down at the end of 2023. And I'm still talking about it now. We're in 22 years gone, or a year and a half. A year and a half after it, whole of 24, and now half of 25, and it's still affecting the market. The ones that you should look out for now is that we potentially may have, and this is outside the commodity side, but it's worth looking at. We may have an annual key reversal both in the euro against the dollar and in sterling against the dollar. And that will impact a lot of things. But I won't know that until the end of this year, whether it happens or not.
Well, Eddie, thanks for sharing the book recommendations and, you know, breaking down the various stakeholders of the market in such a beautifully and simple way. With your such a long running career and, you know, probably you have seen all, what are the trends you are seeing in the commodity risk that traders and analysts should watch for?
I wrote down in my diary, and I'm going to read it. So I wrote it down at the beginning of this year, things to look for.
Wow.
There is a very New York cotton futures heading lower. There's an annual key reversal down in there. London Metal Exchange, the 3-month lead contract, there was an annual key reversal down in that one. And there is an annual key reversal down in a thing called sugar white premium. It's a spread between the raw sugar in New York contract and the refined sugar in London. So, and that one was heading lower. And that's sort of like, you know, these are multi-year trends which will go on and on for a very long time. But the one that's still in my head is soybean meal and the effect it has. And I still, there's nothing stopping me keep saying for over 18 months now, this thing is going down still. From my point of view, from a technical analysis point of view, that all the patterns are indicating a move lower. even now, and that's from the big pattern which happened in 2023. So there is a number of markets, but I would suggest, I can't remember them, just look at my videos and see which ones that you find interesting. But do your own analysis. We're all adults here. I'm just showing you the way. It's up to you to choose if you think it's right, or go forward and look a little bit more into that. Is my pattern incorrect? When I find it wrong, it's because I hadn't seen a pattern, not because I was I'd done something wrong. It's because I hadn't seen what it was that was causing that move in the first place. And it's usually then in hindsight, I'm looking in the rearview mirror going, oh, of course, I should have known that. Yeah. And that's the thing. But the pressures are for weaker grain markets and for weaker oilseed and vegetable oil markets at the moment.
Okay. A lot of people approach me asking, okay, what's the difference between commodity trading versus, the stocks, company shares? And one of the reasons is seasonality. And I think you touched upon this earlier about seasonality in the copper market, and you had a story around that. Could you just briefly talk about that, Eddie?
I'll tell you that story about copper. Okay. Back in the 1980s, when we first had our first computer on using for charts, I remember typing in the prices, because we had to ask the metals desk for prices. It was on metals, really. And I noticed something in copper, which was a cycle, which was around the half moon, new moon cycle. And there are lots of cycles in commodities. When they all come together, the whole thing goes up or goes down or whatever. I remember that story, and I couldn't figure out why. And I had somebody else check it. It was on the trading desk as well. It said, yeah, it doesn't always go in one way, but there is an extreme volatility. Now, I was trying to figure out why. And this is really before the options took off and whatever. So I then was at a cocktail reception during London Metal Exchange Week, which is a big event in October each year. And I was talking to a manager of a mine in Southeast Asia. I'm not going to say where it is, because you'll recognize where it is. But he was heavily involved in gold and copper. And it was up inland. And he basically got, he dug the stuff out of the mine. They turned it into concentrates, and they put it onto barges, which went out to the coast.
Okay.
And then it went on bigger ships, went off to be refined. And he said, it's really, and I was talking to him about it. I had this thing about half moon, full moon. He said, it's really interesting what you say, because we rely on the moon cycle, because we then have either a high tide or a low tide.
Wow.
And the high tide means we can get our barges off the banks out, and we can hedge. So they activated on the back of the full moon, new moon cycle, the hedge for copper. And you think that's a metal. How would it have seasonality? Because where they were located, they needed the high tides to get the barges out to the coast to then go onto the ships. And seasonality is in every single thing. There's seasonality in stock markets. There's seasonality in currency markets. There's seasonality in everything. And there are cycles in that. And these are where the really long-term cycles. You have short ones, longer ones, medium ones. And so you're going to see that. That's something you should take into account every time you look at these. It's not unreasonable. Everybody says, about stock markets in October going down, or, well, they're volatile in October. Yeah. Actually, they start being volatile in September. So you can look in September, and you go back to 87, you go back to 08, 09, you look at any of those times, and you'll see that there was volatility there. You look at any of the agriculturals, it's obvious there's volatility. Then you look in shipping. Well, of course there's volatility, because the cargoes move at that time.
Yeah.
So you have volatility in those as well. And as you said rightly, Ranjan, you said about the Henry Hub, natural gas, nat gas, has highs and lows, as does heating oil, as does RBOB, the gasoline futures contract, and so does crude oil, because the blends are shifted between whether you need heating oil for the winter in the Northern Hemisphere, which is a big demand, or do you need it for gasoline products for the driving in the summer. So there is seasonality in all of those things, and they come in cycles that go through that.
Yeah, for sure. So in the beginning of the show, Eddie, you mentioned that back in the days when you started, you used to deal with the huge roll of papers.
Yeah.
And then with the computers, kind of it was simplified. Now, the new trend which is in the market is AI and machine learning. With the evidence of AI and machine learning, how do you see it impacting the world and the future of technical analysis and trading strategies?
There is the positive, and then there is not going to make any difference. The positive is it will allow me to cover more markets. I say I cover about 200 now. This is after going from paper to what the computers I've got now. With AI, I can be able to possibly cover more markets, because some of the simple things I can ask it to do, which I do every day. I update all my charts every day still. It's a habit I've got into because it gets good discipline, but it will help me update those charts. That's the positive side. The negative side of it is what I do is this, is I do a non-linear function. I do not repeat things I do. I may repeat updating the chart, but every day it's a new pattern. And I can recognize and see those things. Whereas at the moment, the AI we have even now for the next few years will not be able to do that. Plus, where does that information for the AI come from? A lot of it is scraped off the internet, and there's a lot of bad data on the internet. There's a lot of bad technical analysis on the internet. People out there doing their, there was one site I remember in France. Oh dear. He was using a thing called an Andrews pitchfork, and he was just drawing it to fit. He was I don't mind optimization to a certain degree, but he was just putting on where even Dr. Alan Andrews or Jerome Schiff, who developed it, would have gone, what the hell are you talking about? You've got no idea. You shouldn't fit it on because it looks right. You should fit it on because it works. And I think that is the difference. I do a non-linear function, which is non-repetitive, and I can. It's not able to be reproduced by AI at this moment or for the foreseeable future. And I am comfortable with that because I don't think they're able to do what I'm doing. Simple as that.
Okay. Yeah. Thanks for that, Eddie, because a lot of traders, I think retail traders as well, there's a lot of guys on YouTube teaching how to trade with ChatGPT Pro and these other AI tools. So I guess you got to be a bit careful. You got to be a bit careful when.
Look, let me give you an example. Let
Yeah.
me give you an example of what I did. I used ChatGPT just to try something out.
Yeah.
I said, there were these blister packs you have of figures that you could have in plastic. They were a very popular thing about a few months ago. I asked ChatGPT put a action figure in a blister pack of a technical analyst, including John Murphy's book, blah blah blah. What did it come up? A middle-aged white man with glasses. So I said, can you do one of a female version? Because not all. I mean, for example, my vice chairman of the Society of Technical Analysts is a woman. There are plenty of women who are traders, plenty of women who are technical analysts. So he drew another one, white female with glasses, and John Murphy's book. And I said, look, this is a bit racist. Why don't you give me somebody as an Asian man as a technical analyst? And it made a North Asian man with glasses and a copy of the book wearing a suit. And I said, okay, do me an Asian woman, not a South, because ChatGPT is a bit racist. It is because of the information it's been given.
Yeah.
Do me a woman that's an Asian female technical analyst with John Murphy's book. And it did one, a North Asian woman, and it cut its legs off.
Fascinating.
Oh, I thought, what the hell? I've still got the pictures here somewhere. I just thought, this is what we're getting. This is what we're dealing with. There is no. A friend of mine who's a technical analyst was in Africa, and he said we have to make our own AI that is not white European, North American centric, because it keeps doing that.
Yeah.
It keeps coming up with these things, and that's the problem. Is that the chat GPTs of this world, the deep minds of this world, all of those things, they all pick on information, and a lot of the stuff they pick from the internet is in the bottom of the sewer, and they're using it.
Yeah.
Yeah.
Keeping this unbiased, I think, is a big challenge for them now.
Yeah.
But to my future AI overlord,
Beyond a big challenge, I think they're not able to do it at the moment.
Yeah. Thanks, Eddie, for sharing all the wisdom. So, if somebody or some of our listeners want to approach you, what is the best way, for someone to reach out to you?
Sure. My email address is Eddie, Eddie.Tofpik, Tofpik, at admisi.com. You can also connect through me on LinkedIn, or look up my company, ADM Investor Services International Limited, or the Society of Technical Analysts, or International Federation of Technical Analysts. Any one of those, you can contact me, or just type my name into YouTube, and you'll probably get through to the ADMISI YouTube site and be able to see things there.
Well, thanks, Eddie, for being on the show and being candid with us and sharing all the wisdom you have gathered over the years.
Very kind of you.
Thank you, Eddie. Appreciate it.
Thank
the
you.
books and your story is really fascinating.
Yeah.
Thank you for being on the show.